And let's now go across live now to Mumbai, where the RBI Governor Shaktikant Das is addressing the FIBAC 2019.
All aware that there are challenges which the business community is dealing with in the real economy. There are global headwinds emanating from issues like trade tensions, geopolitical tensions, and several other things that is happening around the world. And there are challenges which the Indian banking sector is also encountering. And while thinking about all this, I think, as we have mentioned in our, if I can just remind you about the resolution of the Monetary Policy Committee. The Monetary Policy Committee, before announcing the rate reduction, etc., did very specifically mention that at this particular juncture, growth is a matter of highest priority. And I think this is something which the financial sector representatives, the banks and the leaders from the business community and everyone who is involved in policy making and all regulators are concerned with. Growth today is a matter of highest priority. Now, with regard to injecting the growth impulses, you are aware of the number of steps which RBI has already taken, so I don't want to again list out all the steps that have been taken. And we have also seen in the media that the government has been discussing the various suggestions which have been made by the business and by various other stakeholders of the economy. So having said that growth is a matter of highest importance, it is also important to look at issues of financial stability, because a long-term growth can be sustained only by financial stability or stability of the financial sector. So that is why I have chosen financial stability, as the theme of my address today. Broadly speaking, the core principles governing financial stability can be thought of in terms of the financial system's ability to facilitate efficient allocation of economic resources, its assessing, pricing, and managing financial risks, and in maintaining its capability to perform these functions even when affected by external shocks. Let me first talk about the global context. The global approach to financial stability changed significantly after the financial crisis of 2008, which made it abundantly clear that the financial strength of every financial institution does not add up to systemic stability. The policymakers realized that macroprudential regulations have to be strengthened and will have to be complemented by by measures which deal with systemic risks and which foster systemic stability. Now, the years after the financial crisis, the Basel norms and the Basel Committee, they became active. In India, we also, the FSDC, the Financial Sector Development, the Financial Sector Development Council, the FSDC, and the subcommittee of the FSDC were also set up. The banking system today, as it stands globally, is more resilient to economic shocks. Implementation of too big to fail reforms is advancing, including via establishment of effective resolution regimes for banks. Over-the-counter, that is OTC derivative markets have been made simpler and more transparent. The use of central clearing has increased and collateralization is more widespread. Those aspects of non-bank financial intermediation that contributed to financial crisis have declined. However, the implementation of reforms is not yet complete and remains uneven, especially in the non-banking space. It goes without saying that while dealing with all these issues, country-specific situations have to be factored in. Recent developments in global economy should be seen in this perspective. A weaker than expected growth with signs of slowdown in major economies is one of the key risks to global financial stability at this juncture. Looming trade tensions, as I mentioned earlier, geopolitical risks and related uncertainties continue to exert pressure on investment outlook. The latest global financial stability report by the IMF warns that because of these developments, vulnerabilities in sovereign, corporate and non-bank financial sectors are elevated by historical standards in several systemically important countries and in other regions. Under these circumstances, central banks and other regulators are required to follow the cardinal principle that the regulator never sleeps. Now, cutting the hyperbole out, what it means is that the regulators and other authorities need to be constantly vigilant and proactively take whatever steps that are necessary. The current state of the global banking sector also presents a story of uncertainty. While bank capitalization has increased significantly in the post-crisis period, primarily, as I mentioned, due to the Basel III norms, bank profitability has been lackluster.
The RBI Governor Shaktikant Das, they're making the inaugural address at, of course, the Financial Institutions Benchmarking and Calibration, the FIBAC 2019 in Mumbai. There, in fact, this is an annual event that brings together stalwarts and also thought leaders from the banking and the financial sector to discuss trends and developments shaping the industry, along with also a roadmap